In God we trust, all others must bring data. Well, this is the proof everybody is asking for us when we are saying that the consumption is actually picked up. So, without the proof, nobody is willing to believe that the supply chain side, that the consumption side, that the demand side is actually picked up. Now, with the rising commodity prices, the Indian ink is having sleepless nights because the erosion that is seen in the margins is quite alarming. But does it mean that you should be selling your holdings, especially if you're holding stocks of sectors such as automobiles, auto ancillaries, consumer durables, capital goods? Well, should you be selling all those stocks? More importantly, it is seen recently that if you are a holder of a pharma company stock which is supplying generic drugs to the US, then there is a stress on the margins. With ANDAs falling half of what they were in 2019, there are concerns that there is something alarming which is happening with the pharma companies. But more importantly, there is a concern that the indices are all set to correct big time. Is that true? And if it is, what are the reasons that the indices may correct? And if that be the fact, if that be the truth, does it mean that you should be selling your stocks? Let's find the answers to all these questions, but for that I will require 15 to 20 minutes of undivided attention from your side. Sit back, relax, grab a cup of tea and a pen, paper. That's the old classical way of understanding what has happened so fast in the past 1 week which is affecting your portfolios. You're watching the Informed Investor, Third Umpire, an initiative by research and ranking. Shall we? Where is the proof that the consumption, supply side and the demand has actually picked up? Well, the answer to that given question lies in the Abacus survey, the 53rd one, which has come from the RBI. Abacus otherwise stands for the order book, inventories and capacity utilization numbers. What's very heartening to note is that there is a quarter-on-quarter steady improvement in the capacity utilization trends that are being seen. If you go by the trend, then in Q1 of FY21, the number was 47.3%. This has improved in Q2 to 63.3%, in Q3 to 66.6%, and guess in Q4 or FY21, this number has improved to 69.4%. Now, if the capacity utilization numbers are improving the way that they are, then there has to be a demand in place, because without the demand, without the supply side, capacity utilization numbers increasing don't mean anything. So that is a good part, going from manufacturing to the markets. Now, this is where there is a term which is known as STT. Are you aware of that? STT basically stands for the Securities Transaction Tax. This is the tax that is levied on the exchanges by the government. It's a direct tax, and it's generally 0.1% of the securities which are traded in a given day, which is the cash delivery, and otherwise for an intraday, this STT is nil. Now, the government had a target for FY22 of 12,500 crores. Guess what? Till 12th of August 2021, against a target of 12,500 crores, the government has already collected 8,800 crores. That is 70.4% of the target is already done of STT collection. Well, this is exactly 64% over the base of August 2020. Now, why is this happening? Why are we seeing an increased STT tax collection by the government? Well, the answer is that there are a lot of investors who are getting added to the mainstream investing. And if you go by the data, then 14.2 million investors were added in FY21. To be specific, 12.5 million in CDSL and about 1.97 million in NSDL. Again, try and analyze that why are 14-15 million people getting added. There is the digitization which is happening. There is financialization of savings which is happening. At your own convenience, within a matter of half an hour, you can in fact open a demat account. I'm sure you've done that. And these are the things which are changing the face, which we're seeing the investments evolve. Now, there was a very concerning topic that I picked up in my introduction, that India Inc. is having sleepless nights. And I'm not exaggerating. I'll give you an example of a statement that comes from Somen Ray, and he is the CFO for Bajaj, and he says, Bajaj Auto, and he says that in my 23 years of career, I've never seen a period where commodities, other than of course the crude oil, have risen by more than 50% in a matter of 9 months. Now, why is Bajaj Auto getting concerned? Because that's the input cost that goes in manufacturing what they sell. So if the commodities or rather inflation related input costs go up, then the margins go down. It's a similar concern that has been expressed by the chairman and MD of Havells India, Mr. Anil Rai, and he says that there has been an erosion of about 140 basis points for Havells in Q1 of FY22. And that is because of the input costs, the commodity costs, which have become a little more dearer. Now there is a choice, and that choice always exists, that you absorb the cost, but your margins go down. Or you pass on the costs, and you make the product that much more expensive for the end consumer. And if that becomes expensive for the end consumer, then the chances are that you may lose the revenue and the market share as well. So being at the helm of a given company, there are many moving parts that you have to balance. If the input costs have gone up, then there is so much that you have to understand will need to be balanced. Take for example, what the executive director and the CFO of Hindustan Unilever said, HUL, Mr. Ritesh Tiwari, he says that they too have experienced an erosion of about 110 basis points on the results for Q1 that they have reported. Now, in their case, they've been able to pass on some of this to the consumers. They also said that this was partly due to the rise in the advertising and promotion expenses, but the fact is that the input costs have gone up. Now, what are the industries that are seeing the input costs because of commodities go up? The answer is very simple, that these are the industries or the sectors where commodity-based inputs such as metals, such as oil, such as cement, such as gas is concerned. So if you were to go by the numbers that are being reported by automakers, they are saying that the decrease in the margins for autos in Q1 of FY22 have been the lowest since Q1 of FY2017. And that is the amount of erosion that the automakers or any of the industry makers which deal in commodities are reporting. Now you must be wondering, is it a time to sell stocks which fall under automobiles, auto ancillaries, consumer durables, capital goods, because commodities is a part that goes into their overall product? Is it a time to sell that? Well, don't be in a hurry. Mat karna, because there is something else that's happening. By the way, what are the industries that are not getting affected by this input cost increase in commodities? Pharma, yes. Chemicals, absolutely yes. So Q1 happens to be a mixed bag where many of the companies are reporting mixed bag numbers. Some of them are very happy. Did I say happy? Where all of the people are complaining that their margins have gone down. Did I say somebody is happy? Please keep in mind that somebody's loss is actually someone else's gain. Overall, analysts are saying that corporate India will not see an erosion in the earnings in Q1. I just said that so many people are concerned and having sleepless nights. And I'm saying that analysts are saying that they are not concerned about the erosion in the Q1 earnings. Why is it? Because somebody's loss is somebody else's gain. Please keep in mind that we are not only a manufacturing company which depends on the commodities, but India is also a manufacturer of commodities. So there are many industries that actually manufacture commodity-based products. Now, if you put it all together, then some lose and many gain. The net effect is that Q1 earnings will continue to impress and be a mixed bag for some companies and not for many. Right? So don't be in a hurry to sell your auto stock. Don't be in a hurry to sell your consumer durable stock. These prices will mellow down and ultimately the earnings will come back. So don't be in a hurry. Now, from manufacturing, let's go to pharma industry. And I said that pharma industry, if you've got a stock of a pharma company which supplies drugs to the US in the form of a generic drug, then you must be concerned. Well, let me put it this way, that you can be concerned and you should not be concerned. Okay? Why is it? Because the USFDA has delayed the physical inspection of the facilities that fall under the approval process when granting an approval for an ANDA. What is an ANDA? It is abbreviated new drug application. To the point that in the first half of calendar year 2019, there were 670 ANDAs that were approved. Okay? In the first half of 2021, 670 ANDAs have come down to 328. From Indian manufacturers, there are about 267 ANDAs that were there in H1 of 2019. 267 ANDAs have come down to 137 ANDAs that have been approved. This is purely US, not European, because Europeans believe in doing virtual audits, which US is not doing. So because of the COVID restrictions, if you're not able to travel, you will not be able to audit the facilities, and hence the ANDAs are getting delayed. Now, if ANDAs are getting delayed, why is it that the prices, why is it that the earnings are going down? Clear, simple सी बात है, इसे समझने की कोशिश कीजिए आप. When the ANDAs are not getting approved, the companies are pushing the regular products, and when the regular products are being pushed, then the same products, too many suppliers and very little buyers. Okay, so that's where price erosion is happening, and hence the earnings is also coming down. As soon as the restrictions open up, as soon as the federal agencies are able to do the audits, you should see the pharma companies report better numbers. So are you in a hurry to sell your pharma stocks? उम्मीद करता हूँ कि आप अब इतनी ज़्यादा जल्दबाजी नहीं करेंगे अपने pharma stocks को बेचने के लिए. Alright? Now, I said that there is a growing concern amongst a lot of market gurus, so-called pundits, that in fact there is going to be a rough ride for the Indian indices ahead. Right? Why is it that the Indian indices will have a rough ride ahead? It primarily comes down from the point that there were minutes that were published of the recent US central bank, Fed, and these minutes came on Wednesday for the July meet that had happened. So what is so special about these minutes? It says that the Fed, or most of the members in that given meeting, said that it is time to reduce the size of the monthly asset buying program. And this monthly asset buying program basically buys about 120 billion US dollars of bonds or related assets every given month. This is what people have been saying as taper. Taper? So if Fed comes and says that they're going to be tapering the purchase of these assets, then the term that we say is taper tantrum. Alright? Now those fears are coming alive. They're fears, okay? In my opinion, they're fears. You don't need to be worried about those. But what is also important is the fact that the treasury yields are going down. The US 10-year bond yields are going down to the point that I believe they are at about 1.2%, if I'm not wrong. and this is 1.24% to be truthful to the decimal, and they've been lowest in the past 2 weeks. Now, let's try and understand. The treasury yields or US bonds क्या क्या लेना देना हमसे? It is generally said that the yields and the bond prices have inverse relationship. So if the yields come down, the bond prices go up. Conversely so, if the yields go up, then the bond prices come down. In this given case, when the yields are going down, the bond prices are going up. More people are buying bonds or are prone to or are inclined to investing in safer havens. That's a fear. It may not be the reality, but that's a fear. More importantly, we've seen crude come to levels of about $67 a barrel. Put it all together. This was also the fear that was there about a quarter ago, but abhi kyun itna zyada important ho gaya? It's purely from the point that the equities have reached a very, very high valuation. Any correction that happens in the equities will happen quick and to a pronounced degree. Number two, people are still saying that there is a possibility of the Delta variant across the globe creating havoc, and for USFDA to come, for US Fed to come and announce that there is going to be a tapering of the asset buying program. That means that there is a divided opinion amongst the investing class, and maybe it is not the right time. But higher valuations of the equities, a decision to taper, rising Delta cases in India, the mixed bag of results where people who are dependent on the input cost on commodities are giving bad set of numbers, while as people who are producing the commodities are giving good set of numbers, are all aspects where people are getting a little jittery and saying that you will probably see a correction in the indices. But hold on, because it doesn't mean that you should go and sell your stocks. मैंने ये नहीं कहा. Because the same pundits, the same analysts, the same gurus are saying that whenever that correction happens, and mind me, whenever that correction happens, it will be short-lived, but it will be very, very fast in terms of the retrace that it will do to the earlier levels. Imagine there are so many more newer buyers who have never seen a correction before. For them, it's an opportunity that as soon as the correction happens, they'll buy. And there are many quality names that you will be able to buy at a mouth-watering level. And this is what everybody is saying, is that if at all there is a correction, if at all there are certain sessions where you see this correction happen, the rise will also be very, very fast. More importantly, can I ask you a question? Are you really an investor who's worried about the midterm? Because even if you're concerned about the midterm, please keep in mind that the June quarter earnings that have been reported have had a May lockdown. So May का lockdown effect आपको जून के quarter में दिखाई दिया है ना? So the next quarter people are saying anyways the results will be better. But more importantly, if you are a very, very prudent and a very, very practical investor, then you have to keep in mind that the earnings from the current levels will double 2x in the next 5 years. 2x. So even if this market gives you an opportunity to buy stocks in certain sessions where you may see a correction, by the way, मैं ये नहीं कह रहा कि आपको correction आपको देखने को मिलेगी. There is a possibility, and we're making you remember an informed investor, because these are the corrections that you will probably sell your stocks and run away. Don't do that. Don't do that, because that is not needed. Everybody is taking parlance of Olympics. I thought that I'll leave you with 5 thoughts and not 9. The first parlance from Olympics is that that you have to start early, right? I go back and I found some brilliant examples. It says that the tennis sensation PV Sindhu actually started at the age of 8. That is how young she started, and proudly stood on the podium where the entire world was basically watching her. So whenever you start investing, please keep in mind, the more you spend time in the market and not try and time the market, you will be a successful investor. Have you heard of the 15-15-15 rule? If you invest 15,000, which is the first 15, for 15 years, right, per month, and get a return of about 15% on those investments constantly, then you would end up making 1 crore. 15,000 per month for 15 years with 15% compounding gives you 1 crore. If this rule is changed to 15, 15, 30, you know what that number is? You know what that number is? 15,000 per month with 15% returns for 30 years, not 15 years, gives you not 1 crore but 10 crores 38 lakhs. But हमें पेशेंस ही नहीं है. हम 5 साल, 2 साल, 3 साल नहीं वेट कर सकते, तो 15 years, 30 years क्या बात है. But please keep in mind that this takes time. More importantly, know where you stand. This is the second learning from Olympics. There is a very beautiful example of a weightlifter, Mirabai Chanu. She could not qualify for the 2016 Rio Olympics. She failed in her clean attempts of lifting the weights. She assessed where she was going wrong. She assessed what she was capable of doing. And then she added the efforts to weed away the weaknesses and work on the strengths. You saw her you saw her on the winning podium, correct? In a similar sense, you don't have to be Warren Buffett. I mean, you can't. You can't have billions of dollars of portfolio being created in a span of 5 years. But at least know where you are, what your goals are. That is more important. Third is that overall, be clear about your goals. Now, this is where the example is given of Alison Felix, and says that she says it's not important. And by the way, she's won so many Olympic medals. She says that track and field events, right? So she says that it's not important for you to know the end result only, but it's important for you to write it down, break it down into parts that you can achieve. और उससे भी ज़्यादा important है कि आप लिख लें कि कैसे करने वाले हैं. That is what she says. And this is what you as an investor should also be doing. That don't say that you're going to be making 10 crores. कैसे? Have you broken it down? Have you set aside that cost? Do you have the patience? Are you willing to be an informed investor? Fourth one is a learning for Olympics, the think long term. There is a wrestler who recently won the Olympics for us, and his name is Ravi Kumar Dahiya. He is a gentleman who won the 2015 Junior World Championships, then he won the 2018 Under 23 Championships, and then he qualified for Olympics. So think long term. If your goal is getting to Olympics, then you should go through all the milestones, all the related hurdles you should cross. As an investor, what does it mean? That whenever you are investing for long term, volatility होगी. ये bourses corrections आपको देखने को मिलेंगे. But as long as your long term goal is absolutely intact, you should not worry. And the last one is athletes को भी professional help चाहिए. Without a coach, without the infrastructure, without the proper guidance of each and everyone, they will not be able to succeed. As investors, if you can keep aside 5 to 6 hours every day, if you can calculate the CAGR on your own portfolio, if you can assess the company, the management, the earnings quarter after quarter, then go ahead. You don't need any professional advice. But if you're short on time, short on acumen, short on competence, short on capability, but yet big on ambition, it's not a bad idea asking for professional help from people who do this for a living. Olympics has taught us so much. As an investor, can you imbibe some of these learnings in your own investing journey? It's been an eventful week. There are lot many triggers that have come your way, which can mean that you should sell, but you shouldn't. Because the aim of this given session is to make you an informed investor. ताकि आपको कोई गुमराह ना कर सके. Nobody can misguide you. mislead you. And no news item can deter you from your goals of becoming an intelligent, informed investor. This is Sanjeev, wishing you and your loved ones a great health ahead. Until we meet again, signing off.